The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. And we've got something we should probably be talking about. Not exactly sure.
Code red, repeat. We are at code red, repeat. We are at code red. I
think we're at code red. Should be code red. Painting the tape with a lot of red. 1932.95 on the S&P cash as we speak. Just a little over the lows at 1929.95. We saw huge purchasing of the VIX when we were down here 30 minutes or an hour ago, whatever it was. We're now back down at those lows. So the 10-point bounce in the S&P cash didn't last all that long. And, you've got basically what Ross Perot used to talk about. He's our new commentator here at TFNN. I don't know if a lot of people...
There will be a giant sucking sound.
Yes, old Ross Perot and his giant sucking sound is apropos to today's market, and we'll get into it just a little bit more, but 2.6 billion shares already, and we will get into it. A huge volume day already, and I put out a special report to my readers of the daily newsletter at about I probably put it out at 9:50, but you probably got it about or subscribers got it about 10 o'clock. But I said, watch out for fast markets over the next few days. The opening volume was way up for the first 25 minutes, something that really hasn't happened in a long time. We've had better volume, but not the kind of volume that you had this morning that really told me one thing, and that is that most people who play at home, as they say on CNBC, the home gamers, tend to buy in the first minute and tend to sell in the first 30 minutes. And you can get a good idea what the rubes are doing by that. And they came in and they were more than willing to give everything that they could to that market and in volume. So they pretty much had enough. But the volume continued right through the top of the hour, which made me think that we were going to see a fairly decent pullback today. I warned about the fast markets. For those people that are new, fast markets mean that you kind of need to watch it, but that your quotes are going to start lagging. I saw that maybe a couple of times, and my broker is nice enough to give me warnings when they do start to lag a little. And it wasn't bad. I think it was one or 2 seconds. 5-10 years ago, they could be 30 seconds a minute, 2 minutes, 5 minutes behind, depending on how bad the market was getting hammered. Seems to never happen on the way up with lots of volume, only on the way down. I was talking to Andy Heck earlier today. I said, I always thought that they paid a guy to just pull the cable out or maybe turn off a few routers right when the market was going down fast. No use giving a sucker an even break, as they used to say. Wasn't it Barnum and Bailey? But fast markets are something you should really be watching for over the next 2 days. The reason I say that is that we have broken 18 on the VIX, and it's going to be very, very tough for everybody to not see that the VIX runs to about 23. I think that'd easily take us to 1905, but I have a feeling we're going to blow through that and probably back down to 1870, 1875 because of a condition that I've talked about for a while, which is that everybody's got a model of value at risk, and it seems like 18 is probably where they set the volatility, and they're going to have to start selling stocks, which is going to mean that we're even going to sell more because they're going to have to do a value at risk assessment on the close tonight. That's going to tell them that they're probably going to have to come off their margins. A lot of, especially fund managers, had been sucking wind over the last year against the indexes, and they wanted to prove their mettle. They can do that by, of course, leveraging up. And my guess is that we had just about everyone on the street that had a hedge fund that leveraged out the yin-yang. And that's a technical term, by the way. Most people don't know yin-yang is a technical term. But don't be surprised that we get, maybe in the next couple of days, a huge move down. And I mean monstrous move down, maybe a gap down. And then we may get at least the first level of what I think will be an exhaustion move and see it kind of move sideways for the rest, or maybe even move back up. Options suggest that no one was looking for anything other than a market that stayed probably around 1960 yesterday. I'm going to watch and see if all those people decided to change their mind. But as far as people on the street, they were all buying it yesterday, which means that I suspect that we even have the best traders on the wrong side of this market. That is something you have to watch. But I warned you. I warned my subscribers at least today. Keep an eye out for all those indicators. And like I said, a few seconds today, not a big deal so far. But I'm waiting and think that we'll probably get some real lag coming on in the coming days if we get the kind of blowout low that I'm looking for. And again, I'm looking for blood in the streets to signal a low. Especially, in fact, when I was talking to Andy, the other thing that came up was basically all the people saying that the market couldn't go lower. And I think I talked about it on Monday, and that was that the CNBC commentators, as I like to call them, there's a joke about that. It has to do with a 60s CBS anchorman. Maybe I'll be able to find that joke. But all I remember is the punchline is commentator. So it must have something to do with Idaho. But I'm sure that joke's in the internet somewhere. But just keep an eye on it. These commentators were saying there's no way this market's going to let you in. There's no way you're going to get a 10% pullback. There's no way that this thing is ever going to do anything but go higher, or at least stay where it's at. And as I said to Andy, you don't want to shake your fist at the trading gods. They will humble you and they will break you. As Ivan said, I must break you. Someone said that in the den yesterday. But good Rocky impression out there somewhere. On this day in 1953, when we talk about so much about volume, was the last day that we saw under 1 million shares on the NYSE. Every day since then, we've had more than 1 million shares on this day in 1953. Of course, we've got a boatload of earnings coming up next week. I suspect that some, if not all of these folks, are going to start talking about how the dollar is impacting them, and they will guide at least, if not down, no more than flat. On Tuesday, look for Citigroup, Johnson & Johnson, CSX, and Intel. On Wednesday, Dunkin' Brands, Travelzoo, American Express, Las Vegas Sands, Netflix, URI, and Thursday, Google, Capital One, SanDisk, and SanDisk. I guess I put that in there twice. SanDisk, so important. Of course, Euro all closed down. Draghi basically begging for help from the U.S. Didn't look like any was coming, and I think that's part of the move out here today is the realization that the dollar is moving up, and we are probably headed for higher interest rates next week, or not next week, next year, no matter what the Fed says in their dovish minutes. What can you say? But even the DAX struggled to get to even on the day, but the rest of Europe, a disaster, with Portugal down 2%, Italy down 1%. Basically, those southern countries all sucking wind also. And, of course, we've got some news out here on old Mr. Nostradamus. I'm going to call him Elon Damus from now on because he's making a lot of predictions. And basically, Nostradamus fans are big to say, well, he got this one right. They don't ever bring up every one that he was right. There were 2,000 other. Why they call it a quatrain, I have no idea. But he had quatrains. Can't just say he had wild ass guesses, which is what we called them in engineering. And eventually, if you make enough guesses, they will come up. But while old Mr. Elon Musk is talking about going to Mars and a bunch of other flaky stuff that I don't think the guy really has a lot of concept of at all, other than he likes the media attention that everybody gives him for making wild-ass projections. But it is going to be problematic. But they are having a deal tonight. I think it got to $265 earlier today for Tesla, but he's going to have a deal tonight. Everybody suspects that it's going to be a high-performance version of his car, and instead of having one big electric motor, there's going to be 4 smaller electric motors on every wheel, and it'll be all-wheel drive. I think that was already on the Fiskars, so it's not a new technology, and it's just putting in 4 motors where they used to have 1, and probably not a lot to it, and of course probably putting in a sports car with 2 of the motors that they have currently, with probably a 50-mile-an-hour range, but the ability to melt tires on demand. Retractable wings. Yeah, I don't think so. So anyway, old Elon Damas out tonight, so look for a little bit more of pop. Going to be very interesting. I love this thing to get back to about 275. I think I'll pull the trigger on this thing if it gets back to 275. And I think that there's every opportunity for them to do it. They're going to squeeze these shorts. And again, a stock that's worth about $40, but it doesn't matter because there's 20, 30, 40% short interest. And until you get those guys off the back, the monkey off the back of Tesla, it's going to be a tough row to hoe, as they used to say out there in the fields. The Godfather was out today, and basically chastising Apple. I've been working on doing a Mount Rushmore of blowhards in the tech industry for my newsletter. I wanted to get it all done and get a artist to put them in there on the Mount Rushmore because there's so many blowhards. But big market blowhards right now, probably not a bigger blowhard than old Godfather Mr. Carl Icahn himself. We got a close second coming in now with the gentleman from what's the name of it? Andreessen Horowitz. Of course, the guy that came up with the internet browser, who I've met several times when I was up in that neck of the woods at U of I. But basically, he's saying it'd be really bad, Mr. Apple, if your windows were to break. If someone would come by and throw a brick through the window, that would be kind of tough. Maybe you should buy some shares back so that don't happen. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
This is Houston. Say again, please.
Houston, we have a problem.
And, we got a problem here, right here in River City. It begins with P and it begins with L. And profit and loss. 1929, we're touching the lows here, and the low said, don't touch me. He's touching me, Daddy. Don't touch me. Anyway, we've got Dan with in New Jersey. How you doing today, Dan?
Doing well, thank you, Dave.
So, what do we want to look at today?
IWM. I had gotten stopped out yesterday afternoon.
Okay.
I'm short, and I've had the short for a while, and probably about 116.
Mm-hmm.
But as you mentioned, it's not touching the lows yesterday, and the volume doesn't look as heavy. And the other thing I was concerned about is yesterday it looked like railroad tracks on, candlestick charting on a couple of the indices, and I was wondering what you saw as a bounce coming in or where you'd go short on the IWM again.
I'm looking for the first bounce to come at 104. Are you watching on Tiger TV?
No, sir.
Okay. You can watch the archive. I'm on channel 14 on Tiger TV. You can look at it tonight. Or if you want to email me, I'll send you the chart. Anybody that wants to can email me at PATH, P-A-T-H, at TFNN.com. But here is a great time to start looking at some of the features of the art of the chart, or just getting Tom's book out and checking it out. But the idea of confluence really comes in here, and we've got a fairly beautiful example of confluence in the IWM, and that's why I have not been thinking this is going to bottom out, because I've seen this in so many other areas. But in your IWM example, you've got absolutely perfect confluence. Confluence comes from multiple moves, Fibonacci moves in the market, and you compare the 382 of one to the 618 of the other, and if they come very, very close, look like a piece of paper on the chart, very tiny, you're going to see what confluence is. And in this case, you've got confluence right at the bottom of this gap. That gap up was on October 10th of 2013. My guess is that you're going to get all of that gap in the IWM filled, and that is going to be your first gap. But the two things you look at for confluence is that it happened over a great deal of time, and that the spread between that 618 and the 382 are extremely narrow. So for people that need to dust off Tom's book again, and of course all this stuff, well, at least the confluence levels came from Joe DiNapoli, if you have his book also. But what I'm looking at is the first fib node at November 16th of 2012 at $76.13. You go to the second node, which is $93.83. If you figure out the 618 of one and the 382 of the other, you're going to find out it comes out to 104.20 and 103.84. And this is when this is easy as pie, as they say. But there's a gap right there. There's confluence right there. It's extremely narrow. It's over a huge amount of time. This is exactly the application that you should be using confluence numbers on. And so that's where I'd be. My guess is that we're going to probably bounce off there on the IWM. Since it was leading the market down, it will probably bounce first. The others will probably keep some pressure on it. So I don't think that there's a lot of room, since you already got out of your trade left over. I would be looking at mid caps and large caps for the next big move down in this market.
All right. All right.
I think those have been beaten up so badly that there just isn't a lot of gravy left on that side of the trade. But I think you can find a lot of mid caps and large caps that probably cracked today. And so I would look probably there instead of the IWM. The whole thing could fall apart, the entire market. But my guess is that we're going to see now the rest of the market start to join in the sell-off. And probably going to see a little less selling in these small caps and more in the mid caps. And I really think that next year is when we have the big caps fall apart. So I'd look at mid caps to large caps now.
Very good.
Okay. Anyway, send me an email if you want to take a look at this chart. I'll send it to anybody who wants to. But an excellent, excellent example of confluence over time.
Thanks, Dave.
You bet. We'll be back in a minute.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we are back. Now, let me turn up my headphones so I can hear myself speak. Anyway, a good example of Confluence, and if you don't understand Confluence, go to the website, look at the Art of Timing Trade Charts. There's a video page in there. Take a look. You'll get a little taste of it, but I would recommend buying Tom O'Brien's book. It has the basically point by point on how you figure out confluence areas. But if you like Fibonacci's, you're going to love confluence areas. And they seem to work fairly good. So I'm thinking that we're going to see, basically the big run down in small caps kind of peter out here shortly. But a lot more mid caps start to participating, and of course large caps probably after the first of the year. My guess is they'll try to hold those up as long as they can. Something that's been going on during this week anyway. They've been very, basically, if it affected the NASDAQ like Apple or something, they're going to boost it while they're selling everything else. And the same thing in the Dow. They found the stocks that would most hold up the indexes for a few more days while they were selling out the back door while no one was looking. So we'll take a look at that. Anyway, see, is there anything else going on here that I should know about? Oh, we were talking about The Godfather before Dan in New Jersey called. Basically kind of rattling the cage, trying to get a little bit more cash out of Apple. I don't know if he's selling now, but I would not be surprised to see him go, well, since he didn't do anything, I sold my stock. He may be just looking for an excuse out the back door now that he's seen at least some weakness in this market. The Gap, a long line of CEOs exiting stage left. Gap is one more of those. The shares plunged again. They were off 13% earlier as he's left. But there's probably been, I'm going to say 15 major CEOs leave in the last 45 days. Does that tell you they're ready to ring the bell and start selling? Once they're not insiders, they can sell it well. Exit stage left. Not the only one. Surprise move from the AMD CEO that he's leaving also. So, like I said, just a mad dash to the exits for a lot of these folks. And we'll look at AMD this morning or today. But down hard. Is it breaking the volume that we saw back on October 23rd of 92 million shares? No, not yet. But it looks to me like they know that this is going to be a tough stock to hold because, of course, when you get a new CEO, the first thing that they want to do, of course, is go through your books and throw everything in the kitchen sink into it so that the comps look better going forward. And it may not be a deal where it goes much lower, but the chances of this thing going much higher before we get very much farther forward is going to be tough. Let me put it that way. Now, they've got a couple of decent wins. They're going to be in all the Xboxes. But for the most part, they've dropped out of a lot of R&D. They don't have the capability at all to compete with Intel, especially this fall. So I'm going to say it's going to be extremely tough. We're going to go to Max in Houston. How you doing today, Max?
I'm doing great, David. I have a question. I work for this company called Cameron Drilling, Cameron International, and the stock is getting whacked. And I know it's, all the oils and all the, Canadian royalties and everybody seems to be getting whacked too. But the prospects for the company are much better now than they were, before. And I'm curious if what I'm seeing is the B2C leg or a big ABC up.
I would say you're coming back to test the gap. That gap happened on the 30th of January. You're just coming back and doing what a stock should do naturally, which is come back and fill the gap.
Okay.
So you're going to find probably fairly decent support here at about 57, probably 57.50, somewhere in that neighborhood. It's going to probably go sideways for a great deal of time, though. Don't expect this thing to recover right off the bat. As long as the energy prices are low, it's going to be very hard for anybody to spend any money. We've already seen CapEx on almost all of these offshore drillers go to nothing, and I think that's what you're seeing in this company. Are you offshore drilling?
Yes.
Yeah.
Well, we do both.
It's just just so incredibly less expensive to drag that stuff out of the oil fields, the tar sands, all there up there. I think we've broken through 87, which I thought we might find as support today for crude. I thought it might go down to 85 and then come back up, but it's not even breathing, which tells me I thought that what would happen is we'd probably bounce off 87 back up to about 91 and do that for a few weeks before it took a run at 80. But let's see, where am I looking at here? 85.77 last tick out here. It doesn't look to me like it's recovering at all.
So you see it going to 80 potentially?
What's that?
You see oil going to 80?
Yeah. I think that there's a couple things going on. One is that there is a lot of oil. Two, they want to basically bankrupt Russia. Russia needs about $100 a barrel oil, and anything below that puts them in severe problems. I think they spent, $50 billion in the last week supporting the
the ruble.
Yeah. And my guess is until you see Russia fall to his knees and Putin get excommunicated out of power, You're probably going to see lower crude prices. I suspect that a lot of this is the Saudis who don't like them getting involved in Syria next door to them, stirring up trouble, which they've been doing. So basically, Putin's made an enemy of all of Europe. He's made an enemy of a lot of people in the Mideast. And, of course, we don't like him kind of doing the same things that the Nazis did right before they invaded the rest of Europe. And we're a little bit nervous about that. And so they're throwing everything they can. I don't think that they have that much money left. My guess is what you'll see is a whole bunch of problems in Russia. That crude will come off the market, and that'll probably make a short-term bottom in crude. You know, maybe that happens the next few days. We may have some kind of spike down, but I think you're going to see $80. I was just surprised that we didn't bounce off of and back up above 87. I still thought we were going to 80, but it may just go there like a rocket, and that'll be it, huh?
Yeah, it's been, but in long term, where do you see oil ending up? About 90 to 100? I mean, after we get through this, you know, the next few months, maybe.
Boy, I tell you what, above 91 for the next year looks tough.
Really?
It looks, okay. Yeah, there is a ton of oil everywhere. When oil, you know, the best cure for high prices is high prices, right?
Yeah, yeah.
Now, people are out there drilling the caribou's heads for oil up in Alaska. Anywhere else you can find it, they'd be grinding up fish if they thought they could turn it into the crude over the last year, right? So now you got everybody drilling, everybody moving. You got all this oil coming on from offshore in Brazil in probably the next 6 months. It's going to probably, the supply is going to get better, not worse. And other than small disruptions, but I tell you what, when you can't get the Mideast in flames to move crude, you know that there's something big up, right? Yeah. And I don't know if you heard me the other day when I talked about the Sherlock Holmes thing about the dog that didn't bark.
No, I have not. I'm sorry.
Well, one of the big stories of Sherlock Holmes was about a dog that was in his master's home, and the master got killed. But there were lots of people around, and no one ever heard the dog bark at night. Yeah. And, of course, if someone came in that the dog didn't know, he would have barked. He barked at everybody except people he knew. So the idea in figuring out what you know is the dog that didn't bark told you a lot more than the dog that did, right? It could have been anybody, but you knew it had to be somebody that had been in that home and knew the dog. So when you get news like the Middle East and Ebola and nothing can run, watch out. Yeah. Because it's not operating properly. There's something you vastly don't know at the moment that the market does as a continuum does hold. Even me, I thought, we'd get down to maybe 85 and it bounce close at 87, and it's not, which tells me it's even weaker than I thought. And I imagine Andy's probably going to have some choice words at 5 o'clock tonight. You might listen to what he has to say. He's even more bearish on crude than I am. So, okay.
All right. Well, I appreciate your advice as always.
Okay. Well, have a great day.
You too. Thank you very much. Bye-bye.
Yeah. Not good to know that your company's becoming a commodity. It's nice when everybody wants you. It's when there's a glut of it, it becomes somewhat more problematic. Anyway, we were looking at AMD, some of these other companies that are moving on news out here. Let's see what else we have. We didn't look at, did we? At GPS? I don't think we did. Brinker International. GPS, of course, Gap, we talked about that, and, of course, out with earnings last night. They really got this one to run on the idea, and, of course, Kramer pumped it up mercilessly back up to these highs. I don't know. I always wonder if he's got some, because he was always a deal maker, always running around making deals and here and there for information when he was actually a hedge fund manager. It was all inside information. It wasn't like he was some kind of brilliant savant. In fact, he almost ran his, in fact, his own book talks about running himself into bankruptcy twice with his hedge funds. Only his wife coming by and throwing him out of the office, and his partner saved him. Part of being just a nut. But you've gotten it down here today with volume. This is going to bust. And, of course, the last business you wanted to be in was, of course, clothing, teen clothing, and the Gap was in it. And they were able to roll this up, and I imagine distribute the living tar out of it since it hit 46.84. But a bad sector is a bad sector. It doesn't matter how good you look in that. You can always give me a call at 877-927-6648. That's 877-927-6648. Saw some of these other stocks trying to move. Of course, with the lower crude price, you'd love to see, these airlines really moving higher. But, of course, on a day like today, they throw the baby out with the bathwater. And that's what we are seeing today. And that is, they tried to move this thing up this morning, but down now, higher than yesterday, but not higher than the open. And volume coming in on the downside of this. I'm looking for UAL should at least come back down and fill probably $40.50. That gap, even though it had nice volume, is probably going to get tested. And a great deal of these stocks, if you've got a high volume gap up, are probably going to get back into those in these moves over the next couple of days. I'm actually expecting a huge gap down in the next couple of days, and I think all these gaps are going to get filled, and that's where we're going to see just where the S&P stops. But I thought 1905, but it could be a great deal lower. Okay. Yep. Okay. Let's see what else we have here. Email from Andy. Okay. And send this guy a chart after I'm done. Trying to get all the stuff going on out here. UBS, of course, this thing is down and kept picking up some volume today, mostly because, of course, of their exposure to Europe. But this thing ticked down. It's blown through the $16.48 low from June 24th with 2.5 million shares. It's already got 4.5, so you got all the volume you need out here. Again, there's this big volume gap, and that happened, on, what is that? April 19th of 2013. But we're going to probably come back into that gap. Decent volume, 4.6 million shares, but we already have 4.5 million. So you're going to get that get filled. And then my next guess is the next leg down fills the gap at 14, and you're probably going to get down to 1350, maybe 1375 on UBS. So watch all these gaps. They look primed to go after them. And we'll see what else has gone on here. VOD. Vodafone. This thing, just ugly. Ugly. And as we look at here, not going to show too much. VTR is another one. Had some news on it. Actually up today, Ventas. One of the few out here up. Not a lot of volume, but up on a down day. And what can you say about that? I'm going to have to check this out during the break. I'm going to send my email out during the break. But keep an eye on more. We'll be back in a minute. Give me a call, 877-927-6648.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
That's right. Tom O'Brien is next on most of TFNN.com. We'll look forward to what he has to say about gold. Didn't have a lot of time to look at it today, although I did see the gold miners look like they may be headed back down today, and we'll see how that's turned out. But I focused on my, as they say, tending to my knitting, my own knitting. And I've got a lot of big plays out here, and I suspect that we'll be doing well. Anyway, we're bouncing off that 1930 level, got to 1929. The question is, especially this is Thursday, going into a Friday, do we have a big gap down in the morning? I would say that that is the most likely scenario at the moment, even though I'm going to watch and see if options really moved a great deal today. What we did see in options yesterday was that they got very tough into getting out of a great deal of them. Actually, in yesterday, they were selling just about everything, covering everything, hedging everything. And that made me think that we were probably going to have very, very wide swings. I've been pretty much sitting on my hands. I've got some great positions. As I said earlier this week, I didn't want to lose my position. I knew we were going to get whipped back and forth, and there was no risk-reward scenario where I could get back in these. Maybe you use a different one, but for me, there was no way for me to just buy these and sell them one day and buy them the next day. The risk reward just isn't going to work, and I had to be perfect. I think that there's a lot more money to be made by sitting on your hands than trading these intraday fluctuations. And we'll see in the next 2 days. But we do see 1905. I'm probably going to hit the jackpot on a lot of our positions that I have in the daily newsletter and the Tech Insider both. So we'll see how things go. But we got in early on the ground floor in both newsletters, and I think we're going to be doing good. And of course, watching CNBC today, was going to see if anybody had turned bearish, but guess what?
There seems to be no sign of intelligent life anywhere.
That's true. There was a zero sign of intelligent life. Not a lot of people talking about any downside in the market. The best I could see was someone that was talking about standing aside. They had another thing, which is, I like to call them paid liars, that all come in, and I watched them probably from 2000 all the way down for the next 2 years. And, of course, they went bearish absolutely at the lows, and were bullish all the way back down. But I think we see the same usual suspects from a variety of street names telling everybody how this market can only go up. And as long as they do that, as soon as they start saying the market could go down, I'm going to start worrying, at least a few of them. But right now, pretty much everything that I see out there is blue skies. This is temporary. We don't need to worry about it. But I think we're going to see probably a different view of that tomorrow. Like I said, it's going to be very, very hard going into the weekend. Get a lot of people to stand in, and any little bit of bad news could see a gap down. And the kind of selling into a close, maybe we get that today, but I'm waiting for some blood in the water and some big moves before the end of the day. And maybe that happens tomorrow. Maybe that happens with a gap down. But like I said, on that IWM, we got another point and a half to go. I don't see any reason to back off at the moment. Anyway, we will see you tomorrow. Same bat channel, same bat time. Hang on for Tom O'Brien directly after this show.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.